let's say you have $50,000 to invest, and you have an opportunity to invest in your friend's business. That means you will get business ownership. Or you can also invest that $50,000 amount in the stock market. What's better? Today I want to talk about investing, stock market versus business ownership, and how should you think about this question, because it's a common question. Now, I like to always look at the numbers from a historical perspective. And I want to show you today what are the different probabilities of succeeding by investing in a business in a 1-year period, 5-year period, and a 10-year period. And the same thing for the stock market, 1 year, 5 year, 10 year. Now, for the business, we have a lot of data. The US government publishes a lot of data of how many businesses have survived a 1-year period, a 5-year period, and a 10-year period. So we're gonna look and we're gonna use that data. And then for the stock market, what we're gonna use is we're gonna use the S&P 500, which is the US index representing the largest 500 listed companies here in the US. Now, quick point of clarification, right? When you're investing in the stock market, in reality, you're also becoming a business owner because you're owning a share of a business. The difference is that these are startup businesses. These are businesses that are going to start from scratch, whereas when you invest in the stock market, you're buying shares of a very large business, an established business. So let's go and jump into the numbers. Let's see, when businesses start, right, what do you think is the probability of survival after 1 year? Well, the number is 79%. That means that about 20% of businesses, they close within the first year. Now, when you look at the 5-year probability of success, that number actually drops a lot to 50%. So half of the businesses that are started every day, they tend to close within 5 years. Only 50% will survive past year 5. Now, let's look at the 10-year number. What do you think is that number? That's actually a very low number. 35% of businesses survive after 10 years. Now, this is a survivorship number. Now, also it's very important to know that only 65% of businesses in the US, these businesses here, generate profits. So yes, some of these businesses that are here, they're existing, they have not shut down, but it doesn't mean that they're profitable. Okay? Now let's go to the 1 year, 5 year, and 10 year for the stock market. When I give you these numbers, this is not about survivorship, because the number that I'm going to share with you here is what are the probabilities that you will make money in a 1 year, in a 5 year time frame, and a 10-year time frame. Okay, so in a 1 year time frame, in the stock market, in the S&P 500, 73% of 1 year periods are profitable. Okay, so in the business is 79, so you will say, well, putting money in a business is better. Hold on. What do you think is the 5-year probability of success in the stock market, the S&P 500? 88%. So the longer you wait, the more probability of succeeding in the stock market, but the opposite is true in the business. Now, what do you think is the probability of succeeding in the 10-year period? If you invest and you wait for 10 years, the probability of success is 94%. Now, I'm looking at historical numbers of the S&P 500. When you're investing, for example, when you're investing with Finhabits, we built a diversified portfolio of ETFs. We're not just investing in the S&P 500. In fact, you're investing in more indices that, in fact, then these indices are investing in the companies. But this is a good idea and a good comparison of what is better and how should you think about that question. If I have $50,000, where should I put my money? Should I put it in business ownership, or should I go and have stock market ownership? I also like to say that in the stock market, it's also very interesting because you're not managing these businesses. These are professional teams managing the businesses. Whereas when you're putting money in a startup idea, many times, right, depending on the management teams, they're not experts managing businesses. Most businesses that fail in these periods, the number one reason that businesses fail in the US is because of cash flow issues. So that's something to think about, right? If the business is not generating enough cash flow, or if it didn't plan ahead, that is the number one reason why businesses fail. Very different here than in the stock market, right? The stock market, they're professional teams, their governance, their auditors, right? You are just a passive investor. You also can be a passive investor here, but the people managing the different bets here are also different. So I'll leave you with that, right? Think about business ownership versus stock market ownership. The longer you wait on the stock market, higher probabilities of succeeding. So that's always better to be thinking long term when you're investing in the stock market.